right, ladies and gentlemen, welcome back to the Passive Cashflow podcast. I'm your host, Aaronfragnito. We have a very interesting guest with us today. We have Melvin Landry. How are we doing today, Melvin?
Oh, doing well, man. Thank you very much. Thanks for the opportunity, and I'm alive and well, man. This is a blessing.
Absolutely. I want to have you on the show here. I know you're making moves there in the Midwest and actually at Western PA. So I want to talk to you about how you've landed on that market. I really like how you invest locally, how you help people invest locally there. And you're kind of doing it in an area that we don't see a lot on the headlines and other big guys investing in. So I want to see how you crack the code there. And also just working a business with your wife. Incredible story you have, and a code that I haven't been able to crack myself. I have a bit of a different story there. As most entrepreneurs know, sometimes you got to know when to quit, So,
indeed.
So I want to hear about your success there. But how are we doing today, Melvin? How did you get started in real estate? Tell us your story.
Man, so got started in 2005.
Okay.
And indirectly, I ended up buying, 3 properties in 3 different states, believe it or not. Mm-hmm. My buddies who I went to school with at the University of Arkansas, they were professors out in Western PA, used to always come visit my buddies. At the time, I was living in Omaha. So I was in the middle of the country, and I ended up buying properties in Pittsburgh, Indianapolis, and Scottsdale, Arizona.
Oh.
That's how the journey started. So, the Scottsdale property was almost $300,000 interest only property. The goal was to hold it for 18 months. Since 2005, right? So I hold it for 3-4 years. So you know what happened in 2008, 2009.
Yeah.
It didn't end well. Okay. It didn't end well. So ended up short selling that property. So, okay. Indianapolis, I had a single family home, was cash flowing. I bought it in around the same time, 2006, right? And I sold that one off 2009, 2010. Well, that was the remnants from the fallout, right? So I short sold that property, right? So I'm kind of 0 for 2. Well, 0 for 2 right now, right? And I got one more market here. So get to Pittsburgh, bought a duplex, started buying more REOs, got a realtor who I was hooked up with. Got contractors who I hooked up with. Things are starting to turn. I got a power team. Things are starting to turn. I'm growing.
Nice.
This is my Vegas moment here, right? So I'm keep growing. Man, got to the point where as I'm 50 properties in.
Wow.
I'm cash flowing, doing well.
Nice.
Western PA was my market, and I'm forever grateful. So key learnings from that, right? I struck out the first 2 times. I didn't know what I didn't know. In between that time of growth, I decided to get a mentor.
Yeah.
And I decided to join the ecosystem.
Okay.
So you may not be familiar, but I joined the Lee Arnold system of real estate. It's based out of Coeur d'Alene, Idaho.
Okay.
Paired me with a mentor. Again, I was living in Omaha at the time.
Right.
I moved different places around the country. Went back into PA and really put together a plan to really grow my trajectory to the point where I was 60 plus properties, cash flowing. Affordable housing. That's kind of where my target was, right? I can get properties 25 to 35K. Real cheap.
Right.
That's, in these markets, that's what it is. And build on that opportunity. And I was doing that while I had a full-time job and I was teaching adjunct. So I've always been the one to work multiple jobs. Yeah. But I kind of treated it passively, right? Because I wasn't going down to Pittsburgh and swinging a hammer and fixing. That's not what I do. I don't have time. So put the team in place and it ended up working very well for me, man. So kind of got a growth trajectory, knew my market, right? And I was doing it from afar. So, not to say it didn't come with some headaches and hurdles and late calls and tenants and toilets, right? I was working with property management as well. So, those issues come about when you have such a large portfolio.
Sure.
Man, it would have been nice if I had one building with 60 units versus 60, single family duplexes.
Sure.
But it's a good experience.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, absolutely. That's interesting. I kind of started a similar way, buying smaller properties, twos, threes, singles, got myself a 6-unit, and started to realize the more units you have under one roof, the easier it got. And now we try to buy nothing less than 20 units. That's generally our minimum. But it's really hard to get started buying a 20 unit, even a 6-unit, right? You really, it's nothing wrong with starting with a single family home or a duplex, or in the Midwest where you can get more real estate for your dollar. Do you find it hard to collect rents in some of these like smaller cities where you're dealing with I guess a different demographic, perhaps, that might lose their job or not be able to pay rent? Do you find challenges there?
Believe it or not, I'm a heavy advocate of opportunity zones.
Okay.
So I really love Section 8 housing.
Okay.
I love giving folks a chance, right? And it just so happened when I was starting my growth trajectory, I'd rent to an elderly lady. Maybe she's a veteran. She's on a program. Okay, well, she has a sister who has a voucher. Sister has a daughter who has a voucher.
Right.
And it just kept spiraling, right? And you take care of your tenants. You make sure you address their needs. It goes like wildfire. So I'm getting calls out the blue like crazy.
Right.
Hey, you got a place for me to stay? I'm looking for a place to stay, right? So, good deals sometimes are hard to find from a tenant standpoint. Maybe good landlords are hard to find, right?
Right.
And I'm always looking. I'm mindful of affordable housing and trying to give people a chance to have viable housing and have them with a good place to live. Because it helps their overall well-being, man. So never really had a problem per se. There's always some outliers.
Sure.
But for the most part, man, it was a good run.
Yeah,
it was a good run, and had couples of families, different type of family members living in my units, and they knew me, I knew them, and worked out pretty good, man. So even though I'm bald with no hair, it wasn't as a result of tenants and toilets or termites. So yeah,
that's good.
Yeah.
Now, do you still buy smaller multifamilies, or have you focused on bigger properties, or what's your buy box these days?
Trying to go bigger. So looking at 30 to 50 per se in my own market.
Sure.
Looking to get a better concentration. I'm going to keep investing in my market. I know my backyard. I know, even though the rents are, Pittsburgh is not comparison to, say, a Dallas or Houston. Right. Totally understand that. But again, at the end of the day, there's opportunities in every market. You just got to know where to find them.
Yeah.
And, I'm going to keep looking in my backyard. Right. I'm always looking to kind of build wealth and and I know my market. So we'll keep buying, won't stop. And it's been pretty well. So Class B, Class C, 30 units and above.
So Melvin, people are listening to this, are thinking, okay, so you started with a smaller property, then you start with 2 units, and now you're up to 50 doors in this story. How the heck do you get all the money to buy all that real estate so fast? Like, do you have a money tree you just shake in the backyard every couple months and then go use those dollar bills to buy real estate? And if so, do you have any seeds for that tree I can borrow?
Well, man, it started off right. I was using my own cash. So once I was using my own cash and I got some units in the cash flow, I was actually taking portion of that cash flow and going and buy more units.
Okay.
Then once I found a system, right, of individuals who can lend me for the right price, right, 70%, say ARV after repairs, right, they would lend on exclusive amount of deals. And I kind of understood that model and went and started using my private lender to grow and started leveraging, right? Did cash out refi for a bulk of properties to get cash to go buy more. So I started learning how to leverage in my debt. Right.
So just to give an example here, let's say you found a property for sale for $30,000. It needed another $30,000 in renovations, but then it might appraise for say $100,000, right? Just for numbers' sake. So you were able to buy it for 30, put 30 in renovations into it. Let's chalk another 10,000 up to closing costs and holding costs and refinance costs. But ideally, you go to the bank afterwards. You got a renovated property. You get a tenant in there, a couple tenants depending on the units, and then now it's cash flowing. It's a renovated property with rental income.
Yep.
Bring it to the bank. The bank says, we love rental properties that are cash flowing. We will give you 70% of the appraisal value. The property appraises for $100,000. We will give you $70,000. You bought it for 30, you put 30 into it. You had 10 in operating costs, 30 plus 30 plus 10 is 70.
70, yep.
boom, right there. You get your 70. There you go. So you pay off the lender. Now, the best part of all this is you bring in a private investor to buy the property. You say, hey, Mr. Private Investor, Mr. Moneybags, I have a relationship with. I'm going to buy this property for 30. I'm going to put 30 into it. You know my team, you know my crew. I'm going to refinance with this bank. You know my process. I'm going to get you paid back in 6 to 12 months. I'm going to pay you a 12% interest rate, something like that. So this is going to be higher, higher than the bank that I'm going to refinance out. That's going to be more like a 5 or 6, but I'm going to pay you this higher interest rate because I'm only going to borrow your money for a short period of time. And you're taking a lot more risk because I got to use this money to renovate it and I'm not there yet. So, but it gives you the money to do the deal. Maybe you cough up 10 grand or something in costs and things like that. But for the most part, you get that back at the refinance, and bada bing, bada boom, as we say here in New Jersey. You got yourself a nice cash flowing duplex or whatnot in the scenario. Is that how you did it?
That is exactly how I did it. And guess what? Rinse and repeat and do it again and build it again. So, for the most part, right, getting the tenants, right, I ended up being a household name, right, because I always had a demand of folks who wanted to rent off of me. So that was key in half of the battle there. But that's how I kind of compounded on that trajectory. And even sometimes, right, I was working multiple jobs, right? If the opportunity comes for me to kind of go ahead, grab it, quick cash sale, I would act on it, right? And act on it. And once you build a rapport with your contractors and you got a team, efficiency started to play in, right? Economies of scale, right? So I'm not paying those high at the time, wasn't paying those high rates. And I kept my crews busy, paid them on time, and life was pretty good.
Well, the contractors just need to stay busy, right? Like a contractor isn't a salesman. They don't want to have to go out, do more quotes, get a new customer. Maybe this customer is going to pay them, maybe they're not, because they deal with the same problem we deal with. They'll get shorted on the customer side too, right? So when they're working with a good landlord, a guy who's more of a businessman, who's going to have deals consistently available for them to renovate, and basically always a job for them. It's job security for contractors. And hopefully they've been around long enough to remember 2008 to 2014 when contractors were slow, and if you've been investing for the last 6 years, you're like, contractors slow? Those two words don't. Every contractor I talk to is overwhelmed and doesn't even call me back, because there's so much in demand when the market's hot. Well, guess what? The market's maybe about to slow down, so you might get better contractor pricing.
Contractor,
but that's it, man. We keep our contractors busy. We have about 3 crews that are going at any given time around our 150 units. And once you have enough units in an area, and that's why I want to bring you on, because we both invest locally, it's such an advantage to have economies of scale in one city. I meet a lot of investors that invest in many, many different cities and kind of struggle with management in many different places. And it's just not as fine-tuned a system as when you have them in one location and you can have economies of scale. And that's where you squeeze out profits in these properties. Because quite frankly, there's not a lot of meat on the bone when you're talking about a $900 a month rental or something. Like, your costs are $750, right? At the end of the day, that's not a lot of meat to waste,
But from a tax perspective, right, it's a nice kind of depreciable asset, and that helps out in that regards too. So always being particular in terms of when you work multiple jobs and things of that nature, right? Improving your tax situation is key.
When I say 150 a month in cash flow, obviously that's good. I mean, that's where you want to be. You own enough properties that really adds up. You're absolutely right. It is tax free. That's the most amazing thing about cash flow. You write it off with tax depreciation. And then a second thing happens in real estate, especially here in North Jersey, is it appreciates over time, and inflation helps with that also. And so the more real estate you own, the more you maintain it well. Your tenant pays down your mortgage over time. The value goes up. And it's really an incredible recipe, because we do these cash out refinances every 3 to 5 years as we reposition apartment buildings, and we harvest that equity growth, especially investing in high demand cities that continue to grow in value. And just that big cash out payout is tax free. It's an incredible way, right, to pay yourself on your property, do the cash out refinance. I'm not just talking about the first one where you get your money back. I'm talking about 3, 4, 5 years down the road as the value grows. Tenant pays down a little bit of the principal debt, and then boom, you have some equity in there, and you can harvest that equity growth. Of course, you want to be long-sighted with interest rates and everything there, but for the most part, that's how billionaires build wealth in real estate. That's how they pay themselves. even stock portfolios, billionaires, millionaires, they borrow against their stock portfolio. They don't sell their stock. They borrow against it, right? Elon Musk, he's not going to sell his stock in Tesla. He's going to borrow against it. And they're going to give him a huge amount of tax-free money. And the value of the stock will cover the cost of the debt. And it's an amazing way to pay yourself. We do the same exact thing with real estate. And that's what billionaires do. And that's how they pay themselves in real estate. And that's the strategy we bring to smaller investors all throughout Jersey here. And I imagine you bring something similar as well, right?
Called leverage. Leverage. If you understand leverage,
yeah,
you'll be in a good position moving forward. Absolutely.
I love it. I love it. Now, okay, so you were able to buy, renovate, refinance, and get your crews going. But the management of this must have been a headache, as you're saying. You've lost some of your hair there, I've noticed, and that although you're saying not from dealing tenants and toilets, but how you work a full-time job? You got hundreds of doors now at this point. How are you managing? Even if you have a management company, who's managing all this?
So I learned pretty quickly, right? I tried doing it myself, of course, and that came with stress, as you can imagine. Had to get a property manager, had to get a good team in place to kind of help me out across the board here, particularly with me living in the Midwest at the time, to kind of help get the balance. And there's just certain things that me being in the Midwest at the time that a property manager could do that I can't do. I can't, if there's a catastrophic emergency, right, they can deal with it. They can, well-versed me accordingly and advise me in terms of here are some options instead of kind of being tied up, not being able to address the situation. So it was a good learning experience for me, right? Folks try to do things themselves, but it doesn't. When you're strapped and you're stretched, you got to do what's best for your tenant base, right, to address any issues and so on and so forth. So partnering up with a property manager locally was one of the best things that I ever did. And it, again, while my hair is gone, right, it gave me some relief in that regard during time.
Sure.
Yeah,
absolutely. And you've worked with your wife in this process as well on the management end a little bit. Also, you want to touch on that, how you were able to successfully work with your wife in business, which I found to be very challenging.
Understood. So just within the last year and a half, me and my wife have really kind of connected, kind of start working together, really ramped up in multifamily the last year and a half. I've been in single family, again, as I mentioned, since 2005. And, just knowing our lanes, staying in our lanes, and just kind of keeping us inside of the goal, I think is key. For the most part, my wife works heavily in asset management. She's a project manager and she's a stickler in terms of project plan, right? Getting things done, the things that we need to do, keeping time on task and things of that nature, right? So, we're in the syndication space, right? And some of my units that we're active on are in the San Antonio market as well. We invest across different states, as well as investing in our own market from that standpoint. Myself, I'm kind of an idea generator, right? I'm always kind of trying to build relationships, right? Talking with brokers, getting to know other individuals and other potential teammates, right? As we kind of work and grow in the syndication space. And it's been quite a journey, man. It's been fantastic to say the least. We've really accelerated our trajectory. Yeah. We love investing passively. The opportunities make sense. And it's going quite well. So it's a balancing act. Don't get me wrong.
Great.
And there's sometimes there's this friction, right? But again, we balance it. We understand. We know the end goal, and we know where our superpowers are.
Yeah.
And we try to stay out of each other's way. Sure. And I find when we try to stay out of each other's way and we divide and conquer, we do very well. Good. Versus trying to run to the same task and run into a wall, and we both work from home. So as you can imagine, I'm upstairs here talking to you. She's downstairs. So we're a scream away. So it's all good.
Hey,
literally.
Hey, the internet come out for you too.
Literally. So yeah.
Yeah, I know that. For 2 years I did that with my wife. We both worked from home, and no, I go to the office now. Let's just say I go to the office. Let's just say that. Oh boy. No, it's all good. It's really, really hard. Listen, marriage is a balancing act, right? Which many of us struggle with. So it is definitely an interesting challenge to be running a business with your wife and your partner in life. So, but partnering out your weaknesses, staying in your lane, whether you're married to someone or not. My business partner, Seth Martinez, and I, we've been doing real estate together for years, over a decade. We've done over 300 transactions together, and we've done a lot of different stuff: wholesaling, fix and flips, apartment buildings. We've had tough deals where we've lost money here and there. We've had great years where we've made 7 figures and then got nailed on taxes and had those challenges. Yeah.
And the good thing coming out of that, the one thing that was refreshing to hear, right? You talk to different individuals or whatever, and everyone's always gleaming in on the glory days, right? I've done this, I've done that, I've done that. There's been no failures, no time you maybe have had a hiccup or hurdle. And I think articulating that, kind of being transparent, that, I mean, life is not perfect. Some of the decisions that we make are not perfect, right? It's key and critical, right? So, you asked me about my earlier portfolio when I started. Well, I had to end up selling half of my single family portfolio because at the time, I was living in Dallas, Texas, and we ran a franchise, and we operated the franchise. It was almost $1 million investment. Well, we ended up closing the franchise.
Oh my gosh.
And when you close it, right, it comes with ramifications, right? So we had to bear that in mind. We had a storefront, operated 4 years. It was, my wife worked 70 to 80 hours a week.
Oh man. Woo.
Never collected a check.
Oh no.
My mother-in-law, she's now 74. She started helping out in the business 20 to 30 hours a week to give the daughter some help and support. We couldn't afford to pay her.
Right.
You already knew I worked multiple jobs. I started helping out in the business for the last year and a half, 2 years, doing catering, and grew that to a 6-figure operation. Right, we was in Texas, calling on buildings and doing weddings and birthday parties and all type of stuff, and really enhanced the sales. Didn't pay me either.
Oh my God.
Work for free. So there's a means to an end, right? So we made a decision to exit.
Yeah.
And it came with some ramifications, but we were able to settle, figure things out, and move forward amicably as good working class citizens in our own directions.
That's
here we are.
Yeah, there you go. What a challenge, but a success at the end of the day, moving onward, learning, and failing forward, as we say, right? And it's funny. Failure is an interesting word. We all, in today's society, our Instagram society, our clickbait society, the word failure, it's people are, oh, you failed at something that's negative. You started a business, it didn't succeed, you had to close your doors. But the people who are dissing you never start a business generally, or never took those risks, and always have something to say about, oh, well, you shouldn't have done it, or if you just got a real job, what life is about is the journey. It's about going out there, swinging the bat. Babe Ruth had the most amount of strikeouts. It is about just swinging the bat. Now, you want to swing at strikes and not balls, but for the most part, man, if you're not out there swinging the bat, don't freaking give me your feedback about your opinion. It's what you did is part of entrepreneurship. It's part of capitalism. It's important we try to create businesses. It's important we get things going and figure out how to make a profit. And it's important when it doesn't pay us any money, we bring it out behind the shed and shoot it, right? As Kevin says, it's very important to do that as well. And that's the hardest decision. I've seen people 20 years in say, oh, the business never made me any money. I lost my wife. I lost my house. My kids hate me. I still show up here every day. It's like, then why? What are you doing? What are you doing? This isn't helping you. Sell the business, shut down the business, stop, and so it's really incredible. Don't make that mistake either, and that's a hard decision to make, when to close the doors and when to, because there's a cost to that. There's a real cost, not just ego.
There's a real cost. There's an aspect of pride. I was not in alignment early on in terms of wanting to close and just like, man, we have an identity. Right, folks in the community know us. Folks from different areas of the city we're living in were coming to visit us, coming here to this center because of us. So there was a pride facet that it had me cringe and be like, man, it's gonna suck, right? That we got to close. But you know what? At the end of the day, if it didn't make dollars, it didn't make sense, and we got in alignment. And we aligned on the plan and we executed the plan. It's like, if we keep doing this, right, eventually I'm going to end up getting rid of my entire real estate portfolio. And wasn't willing to do that. And again, right, when I started off in real estate, it was kind of passive. I invested in different states, but I was doing it from the centralized heartland of America in Omaha. And, I did quite well after I got a little bit of mentorship, a little bit of education, and I took action. So, it was, took it on the cheek, man, in terms of closing it, but best decision we could ever make in our life, from me and my wife's standpoint, closing it and moving forward.
Yeah, also for your marriage too. I'm sure it causes strife. I mean, I've run a challenging business up in Vermont, with our Airbnbs, and we did okay on it, but it was just a lot of other challenges as well. She got pregnant, we had a baby together, a lot of complications there. Yeah. And that's one of the biggest things that you have to recognize, and I did that with my Airbnb properties. We had about 6 units going over about 5 properties in Southern Vermont. We had moved up there. Diana, my wife, was managing them. My company, People's Capital Group, was buying them. But at the end of the day, we're saying, you know what? First of all, the market was really, really hot when the pandemic was going on, and it's starting to cool down and go back into that sleepy, rural market. And we kind of saw the writing on the wall there. Secondly, we bought it at the beginning of the pandemic, and the value shot up by like 40% in like a year and a half in this no-name market. And we would be fools not to exit at the top. And thirdly, it was causing a lot of strife in our marriage and challenges and other things to come about, like a baby, and which we had to focus on. So, and life happens. So we sold the assets for a nice profit. Our investors did fine. We focused. We moved back down to New Jersey here, focused on our assets here, which was definitely the right move for my family, for my business, and for my investors. So you have to make those decisions, and those are hard decisions to make, but leaders make those decisions. Good leaders do, at least. It's unfortunate. You look at our politicians today, like no one's capable of making a decision, it seems, but like good leaders make decisions. And I think our youth needs to see that and not be afraid to make decisions.
Yeah, indecision can really, really dampen or destroy dreams. So I tell that to any and everyone in terms of, look, make a decision. Sometimes they're tough decisions. And one thing I love with my wife, we may differ. We differ a lot, right? It's all good. But we align on a decision, we stick with it, and we move forward. And whatever the outcome is, we bear the responsibility for it. And hey, same thing with the decision when we made the decision to exit our business journey. So, but again, it ended up being a blessing. Real estate ended up being an enhancement of a blessing for us in regards to that. And it's all good, man. It's all good.
I'm really happy. No, I love your story there, Melvin. I really do. You just one last question here. So you said you're investing passively. Talk to me a little bit about how you kind of are you an LP on certain deals? Did you get into the syndication space?
Yeah, I did. So I joined an ecosystem, right? So I'm part of the Brad Sumrock ecosystem. I'm also part of Raise Masters as well. So we spent a lot of investment the last 12 months in on education to the tune of over 6 figures.
Woo.
So we're really, between that, masterminds, things of that nature. But again, hey, that investment allowed us to kind of forward speed our trajectory, right? I'm co-sponsor in 250 doors. We like San Antonio market. We're bullish there. Right. And, in other, primarily Texas, but Midwest as well, like Ohio, like Kansas.
Yeah.
I've lived in Omaha, Nebraska, and Iowa. Those are where we're looking for, as well as our own backyard in Pennsylvania.
Right.
Looking for opportunities to kind of grow our active doors under management and find partners, to help to kind of help take down big opportunities as well. So, yeah.
Okay. All right, great. So you're always connecting with new investors, buying new properties. I love how you're investing in your education. How can people connect with you to learn more?
Yeah, people can reach us. We have a website, morelandequity.com. As you see here in the top corner here of my background here. Additionally, we have a podcast out called Get Diversified. Get diversified. So everyone should be open and willing to trying to get diversified for helping their financial betterment, right? From that respective standpoint. So that's where you can reach us. So.
Okay. Excellent. Morelandequity.com. I like that title, the name.
Yeah. So it has a ring to it.
Yeah.
My wife's Italian, as we kind of spoke to earlier. Morelli, that's my wife's maiden name. And then Landry, right? So morelandpartnersequity.com. So that's how that came about.
What I think when I see it is they're not making any more lands.
That's true. And specifically, specifically here, right? In other areas in around the country, right? They're trying to build, but there's not enough land. Yeah. So
Not making any more land.
yeah,
Absolutely.
yeah.
So that's
So
what I think when I see that title. So really, yeah, cool business name.
all
Definitely.
good.
Definitely. All right, Melvin. Well, it's been a pleasure having you on the podcast here. I've
Thanks,
really
man.
enjoyed your story. I enjoyed your honesty and your transparency. That's incredible. And I think you're doing some great things there with affordable housing and investing in different inner city communities. And, working with Section 8 tenants is challenging. It can be challenging sometimes. And what you're doing, I think, is very admirable. Really being a good landlord to tenants that aren't always treated properly and by their landlords. And you kind of touched on a nice niche there, which we didn't expand on too much. But basically, Section 8 landlords are kind of known for being slumlords. It's kind of the unspoken, unfortunately, you find out there. So being a good landlord in that space is extremely important. We have Section 8 tenants as well. And you have to, no matter what the tenant is, how they're paying your rent, you got to treat every tenant the same. We treat our tenants the same way we treat $1 million investors, and contractors and anyone we do business with. So that's the most important thing. I'm sure you do as well. So I just want to, really comment on that. It's very admirable to be a good Section 8 landlord and take care of your tenants and be a kind of a shining light in a bit of a dark space there,
Indeed, man. Integrity, it starts with integrity, right? So everyone deserves the opportunity to be treated fair, equitable. Integrity is key. And what I pride myself on is, integrity and transparency in every step of the process. I think once you kind of follow that model, good things will happen, right? And there'll be no issues or no, there may be issues that come down the road, but it's how you deal with them, right? And the respectiveness of those that you're working with, that's key down the road. So indeed.
Definitely cool. All right, Melvin, well, have a good day, my friend. We'll talk shortly. All right, keep crushing it.
Thank you, man. Appreciate it.
Thank you.